Time for the markets. Zac Ashmore in studio with more of what he calls signs of encouragement in the marketplace. Zac?
Thanks, Mike. Markets took a slight downturn last week, save for soybeans and wheat. However, the rest weren't hit badly and we're still in an upward trend. Let's take a look. Last week's biggest gain, soybeans, followed by wheat. This corresponds with China's big buying spree we talked about last week. We'll dive deeper a little later. Biggest loss, lumber, finally showing some price correction from its meteoric rise the past few months. Looks like supply is starting to meet demand there. Last week I told you about a V-shaped recovery, at least that's what some economists are speculating. To talk about it cattle side, Mississippi State University Extension economist Josh Maples says things are definitely looking up.
I think we're seeing a bounce back. I think we're firmly in the middle of a bounce back right now. Futures prices are back to levels that we really haven't, cattle futures prices back to levels that we haven't seen since the pandemic started. We're not anywhere near back to where we were in January, but we're not at the lows that we saw in March and April. So I think we are seeing significant recovery. Looking ahead to the future, can this continue? I think the big question will be that backlog of cattle that we have to work through. We backed cattle up not just in feedlots, but there were a lot of cattle that didn't enter feedlots as quickly as possible. So we've got a lot of cattle out in the country that are still making their way to their next destination. And so how efficiently we can do that is going to be a big factor in what prices can hold up to. So, looking ahead, things are definitely brighter than they have been. Every week seems to be an improvement. So I'm optimistic, especially considering where we've been.
Farmweek's talked before about ongoing drought conditions in the Midwest. Right now, scant rains causing concern of lower yields among producers. On the flip side, other experts saying it's not as bad as it looks. What's the cattle side? Once again, Josh Maples.
A very important one, and I wouldn't say that nobody's talking about it. People in the area are especially talking about it, but we've got a drought brewing out west, and this is concerning for cattle markets because a lot of cattle end up going out that area. So on the drought monitor scale, we've got a pretty big spot of drought at the D3 category, which is not quite the top. D4 is the highest category. And a week or two ago, we actually had a little bit of D4 drought, and some rains have softened that a little bit. But there remains significant concerns that if we don't continue to get some moisture out near the Texas or near the Oklahoma Panhandle and in that area, that part of the country is not going to be able to support as many cattle as they might typically do. So not a major concern that's affecting markets just yet, but it is definitely something to keep an eye on as things progress.
Moving on to trade. As we said, China on a buying spree of U.S. commodities, namely corn, wheat, and soybeans. According to Successful Farming, China's bought 51% its annual corn quota since January and 35% of its wheat quota. Looks like the world's largest ag market might use up its yearly quotas for the first time ever. That's good for U.S. producers. Means their product has a buyer. Analyst Mark Gold says political tensions don't seem to matter. China wants to buy, so they will.
To me, there's been a lot of discussion with the U.S.-Chinese tensions, the Chinese, basically shutting down their embassy in Houston. There's a lot of talk out there, but we haven't seen it affect exports really one iota. If you look at the weekly sales figures this week, 2.3 million metric tons out the door in corn and beans. They're not stopping buying. And I just don't think that with the way the Chinese system is right now, you've got corn prices through the roof. They want to expand their hog production. So I think we're the game in town, and if we grow it, I think they're going to come. I think the big question is, do they front load it before the election, or do they wait till after the election? I think we'll see some, as we have seen before the election, but I still think there's a lot of big buying out there that may come after the election. I've always said a lot of times is what a market can't do that's as important as what a market can do. And the market couldn't close at $9 today in the August contract to get both the puts and the calls to expire worthless. The calls had 4 or 5 cents of value in them as they went off the board. And I think that's indicative that there's some pressure on the shorts here. So when we see this kind of action, makes me a little bit friendly, particularly for next week. I'm hopeful, barring some unforeseen news with the Chinese, that we can open this thing higher, maybe get some of the funds to start chasing in some of their shorts. And I thought it was a very positive close, particularly in the August beans. I like the close, and I think certainly the bean market will go higher.
And that's it for a deeper look into the markets. We're still early into quarter three and things are looking up. Let's see if momentum holds.